Hi, I'm Todd Rosenbluth, and welcome to another episode of ETF 360. I'm joined today by Jordan Farris of Nuveen, and we're here to talk about semi-transparent ETFs. Jordan, thanks for joining me.
Thanks, Todd. It's great to be with you again.
My pleasure. So we're here to talk about semi-transparent ETFs. Nuveen launched its first product about a year ago. What are some of the characteristics of these ETFs that investors should know about?
Sure, Todd. So as you mentioned, it's been nearly a year since we launched our first active semi-transparent ETFs. And this expanded our existing suite of ESG and fixed income index tracking ETFs and brought our total ETF platform to 19 products with about 7 billion in AUM. We viewed the launch of our active semi-transparent ETFs as very much aligned with our overall ETF strategy. And that's bringing our best capabilities to market in the wrapper in which clients are really looking to purchase these days, really meeting them where they want to be met. In terms of the attributes that active semi-transparent ETFs and the wrapper bring to market, they're really the same as traditional ETFs. So you get the simplistic cost structure, you get the intraday tradability, and you get the opportunity to be very tax efficient, which I think is critical for the ETF wrapper. In addition to that, the active semi-transparent ETF structure offers active portfolio managers the ability to really pursue their investment objectives without the risk of being front run. So I think it kind of combines the best features of a mutual fund with the best attributes of the ETF wrapper.
So we're starting to see these products gain traction. Why do you think now, a year for not only your products, but for the broader industry, that these are being adopted?
So I think there are two reasons. One is really product specific, and then two is going to be, I think, more wrapper specific. So from a product perspective, the ETFs, at least ours, have delivered upon the investment objectives that are in the prospectus while being relatively easy to access. They've been in market for a number of months. And for those strategies that we have, three of them that replicate existing strategies that exist in either the mutual fund or the SMA wrapper, due diligence teams are able to look at the strategy in addition to the actual wrapper. So they have a longer history to be able to look at. From the perspective of the ETF wrapper, it's no secret that flows have continued to set record numbers. In 2021, we set yet another record within the ETF space. And we've seen mutual funds, particularly within the U.S. active equity space, continue to see outflows, while flows into active equity ETFs have managed to receive positive inflows. So that's representative of a shift taking place with investors looking at a more modern wrapper meeting the ETF. And I think we'll continue to see growth in the active ETF space in years to come.
Well, with newer products such as the semi-transparent ones, there's a focus on just the trading costs and whether or not investors can get in and get out in a low-cost manner. How has the secondary trading been within the Nuveen suite of products?
So secondary market trading for our active semi-transparent products has been very good. It's been as good as any other active transparent ETFs. Spreads, which is something that we keep a very close eye on, have generally been very tight, generally been within 15 to 20 basis points. And there have been no noticeable premiums or discounts associated with our active semi-transparent ETFs. Now, I would mention and sort of caveat that by saying that all semi-transparent ETFs in market right now, including ours, focus on the U.S. equity market, which is a relatively straightforward space to market and to trade in. I would also mention, though, that active semi-transparent ETFs are required to track and report on a variety of items, including things like tracking error, spread information, premium discounts, and to stay within a certain set of parameters that are determined by our exemptive relief or our permission by the SEC to actually list these products. So I think this provides an additional layer of comfort in that reporting, in that tracking for investors to be able to invest in these products.
So now let's get specific about one of your products. Nuveen Dividend Growth, NDVG, is one of those semi-transparent ETFs. Let's talk about what makes it interesting.
Sure. So the Nuveen Dividend Growth ETF, you mentioned the ticker. Thank you for that, NDVG. It invests in high quality, mid and large cap companies that have shown the ability to grow their dividends over time, as the name actually suggests. The objective of this strategy is to provide really a combination of total return as well as income, while having lower volatility than traditional large cap benchmarks, something like the S&P 500 or the Russell 1000. I'll say that the theory behind dividend growth is exposure to companies with persistent and growing dividends over time has led to the opportunity to preserve capital while also managing risks, including, and I think this is important right now and very topical, during periods of elevated market volatility, of rising interest rates, and of high inflation. So given where we are in the market right now, all three of those things being true, we would expect to see the Nuveen Dividend Growth ETF outperforming, and it has. So year to date, the ETF is in the 12th percentile within its large cap blend Morningstar category and has continued to drive strong returns relative to the S&P 500. So investors looking for a strategy that provides a stable return, lower volatility, and an income component may be interested in taking a look at NDVG.
Well, we're certainly seeing advisors more interested in an equity income component given the rising interest rate environment. So this is great to be able to get to know NDVG. Jordan, thanks a lot for your time, and thank you for tuning in to ETF 360. Have a great day.